The problems and inefficiencies within trade finance are well documented.
And now banks are beginning to embrace the benefits and the solutions of blockchain and other financial technologies to speed up transactions. Well, Finbarr Bermingham is the Asia editor of Global Trade Review. Welcome to Sibos TV. Thanks for joining us. And look, tell us about the progress that's being made in this area.
Yeah, it's made real strides over the last, well, certainly in 2018. If you think about 2016 and 17, all of the banks were doing proof of concepts and pilots, trying to show that perhaps there was a use for blockchain technology in trade finance. It was very frustrating as a journalist because they would do these pilots, they would do these proofs of concepts, and then they would be parked and they wouldn't go any further. 2018, we've seen a lot more sort of progress with live transactions being done on blockchain, with numerous consortia involving some of the big banks in the world, some of the big shipping companies, all sort of moving towards a commercial blockchain solution for the trade finance industry. So slowly, but it's getting there.
But Finbarr, in your view, why has it taken so long?
I mean, you've got an ancient industry. I mean, the trade finance industry is basically paper-based. Everything is done manually. Everything is done by hand, by courier. So in many instances, you've got cargoes of oil, cargoes of commodities, which are arriving in their destination before the documents which underlie them. So basically, it's an industry which is very much set in its ways. So there's a lot of vested interest. There's a lot of people who have been in the industry for decades and decades. The bank systems are all entirely legacy. Some of them I've heard use pre-Microsoft systems in the banks. They use green screen. So to then go from that to make the leap to blockchain technology is quite, it's quite a big thing to do. So, I mean, I think it's natural that it's taking a long time. I think that eventually it will be more of the next 5 or 10 years rather than an instant thing that we'll see. But yeah, it's because it's such a massive leap. You're basically taking from something that's been used since ancient Rome, the letter of credit and documentary credit, and trying to replace it with something, that most people can't even get their heads around. The technology that's used to trade Bitcoin. So it's a great leap.
But is that the only thing that's holding it up, or are there other factors involved as well?
Well, I mean, it's a huge cost. There's huge risks involved, I suppose. I mean, it's just like changing anything. I mean, you really have to have everybody onboarded. This is not the sort of thing that one bank can even make a dent in. It would have to be an industry-wide effort. Banks inherently don't like collaborating. They're sort of competitors. They have a lot of proprietary information. They don't want to lose clients to other banks, so it's not really in their nature to collaborate with one another. And yet, if you really want to implement a blockchain solution in the trade finance industry, it has to have the buy-in of everybody. So that's another reason why it hasn't really taken off as yet.
And Finbarr, why are people wanting to use it? What is the benefit?
Well, if you think about the fact that trade finance is basically done using pieces of paper, that leaves so much room for fraud. It's very easy to manipulate an invoice that's written by hand. It's very easy to forge a warehouse receipt, and that's something we see all the time. We see cases in Asia and elsewhere of bad actors, to use a term that's in the industry, basically using a fraudulent warehouse receipt to get a loan from a bank, and then maybe using that same receipt to get a loan from 10 other banks. So the banks are getting hit in the pocket here with fraud. So if they digitize the whole process, then the argument is then it would be less vulnerable to fraud. That's one aspect. Also the fact that it's an incredibly inefficient industry. As I alluded to, there's paper-based processes that take weeks to get from A to B. They're all done using courier, so it's costly as well. So I mean, those are the incentives for I guess bringing it into the digital era.
But what are the implications? We see the benefits of the digital. The use of that digital technology, but as you're saying, some areas, some institutions haven't quite got there yet. So for the ones which are trying to find their way, what are the implications for them?
Do you mean like the negative implications, perhaps of blockchain technology for the banking industry? I mean, there is the argument that if banks don't embrace this technology, they could be basically left redundant. If not redundant, then certainly lose a lot of the auxiliary services that they offer. This is a way of sort of democratizing this financial services industry by, decentralizing it away from the sort of very primacy of banks, which, if they don't sort of move with the times and with the digital era, we may just become a lender of note. They won't be able to offer all the additional services that they already do, because there'll be smaller and more nimble and more efficient FinTech companies that potentially could do that, thinking about things like payment processing or, any sort of warehouse, management or so on. If a bank's still living in the Stone Age and it's not moving with the times, then they could be disintermediated. So that's one of the challenges that banks face when dealing with blockchain. And possibly that's one of the reasons why they are so vocally trying to embrace it as well.
It's an interesting point. What other areas of FinTech are making waves in trade finance?
It's an industry that's ripe for disruption, but then again, they've been saying that for decades. But it feels like with the latest and the current wave of FinTech developments, there really are some exciting technologies. Artificial intelligence. There's a massive trade finance gap, particularly in Asia Pacific, where banks are, the banks have basically been told that they have to know your customer, they have to know everything when they're onboarding their customer, and this is making them not really want to finance business in perceived risky markets. So maybe somewhere in emerging Asia, for example, they may not go to the nth degree in order to find out who this trader is, because they don't want to incur the cost of that. Things such as artificial technology and machine learning can help to automate that process. They can, big data can also allow banks to leverage, technologies such as those to make that a bit of a smoother process. And, hopefully with a bit of luck, it will mean that there's, it helps fund trade in developing markets.
Okay, so much to think about and pursue. But Finbarr Bermingham, we'll leave it there. Thank you so much for joining us on Sibos TV. Thank you.